You know that moment when the market looks like it's breaking out, but something just doesn't feel right? This week was that moment, over and over again. Every spike, every pullback, every this is it move was just another setup. The market makers played this week like a script, and if you were paying attention, it was a masterclass in manipulation. Hi, my name is Janet, and this is Trade Travel Chill. If you're new here, welcome. If you're returning, welcome back. Be sure to hit the like and subscribe button so you can be notified every time I upload a new video. With that being said, let's go back to the weekend and unpack it move by move. What started as a typical weekend trap actually turned into something much more interesting. We saw price make a move early Sunday and again come market open in the dead gap zone, which immediately puts us on alert. Remember, any move that happens while the market makers are off the clock has the potential to be deceptive. The weekend is notorious for setting up what we call the false move week beginning, where price lures traders in the wrong direction before Monday's real move starts to unfold. So with that in mind, let's break it down. As the weekend played out, we noticed price pushing up while open interest began to climb, meaning traders were starting to pile in long before the market opened. That's our first red flag. When open interest rises during a weekend move, it often sets the stage for a reversal pattern early in the week. Now, another thing to take note of is that weekend move created a CME gap. Not every CME gap gets filled straight away, but it is something we always keep in mind. When price creates a gap going into the new week, it gives us a clue to watch how Monday behaves when liquidity returns. So heading into the new week, we were already on high alert that this move here could be the false move week beginning day trade and to look out for potential reversal patterns that sends us into the 3-day swing. Coming off that weekend trap, Monday opened with the kind of hesitation we expected. By the end of the Asia session, we saw a clear stopping volume candle come in, halting momentum to the upside. So think of it as the market maker slamming on the brakes, signaling that the move from the weekend was likely running out of steam. From there, price fizzled out, nothing much exciting happening through this move during the UK session. However, in the US session, we see them make an attempt to push price up, creating the second side of a 15-minute formation. Exactly what we'd expect if the market was preparing for downside. So far, the structure has played out beautifully. Liquidity engineered over the weekend, rejection at a major resistance, and confirmation through the sessions. Now, during Asia's live session on Monday, Jay gave the community a great heads up. He pointed out the exact area of interest to watch for the reversal patterns. His focus was on traders identifying the signs of exhaustion rather than chasing the weekend push. He shared that if you weren't looking to scalp the rise level 3 on the 15-minute time frame, patience would pay off. The plan was to wait for the move to fully play out and then watch for the M formation around that 116 to 117k region. That's the area where Asia could shift into UK or US changeover, giving us the cleanest structure and opportunity. So you can see we came into his level around the 116 to 117k region. We got that stopping volume candle. All we are waiting for now is our signs of reversal pattern. In this case, we got our multi-session M formation from the gap between Asia and UK into the US session.
Assuming that my count is correct, with fake move week beginning, you can't be too certain of these things. The delta currently 13.7 billion to the long, so it's still got some room to get up. If we get another push up and that open interest keeps rising through that move up, that's probably going to have our delta getting close to that 20 billion mark where we like to start looking for pivots. That may not play until Asia UK changeover, maybe not even until somewhere in the US session changeover tomorrow. So we'll see what happens, but yeah, that's my current expectation.
So as you can see, our team are absolutely nailing the TA prior to the moves playing out. Now let's shift into the macro side because SilverWolf's Monday blog tied perfectly into what we were seeing technically. He opened by noting that the US inflation data came in slightly cooler than expected. CPI at 3% year on year, dropping below forecasts. That small change was enough to spark speculation that the Federal Reserve could end quantitative tightening as soon as next week. And that's huge because an end to QT means liquidity coming back into the markets, which is bullish for risk assets. But SilverWolf also reminded us while liquidity might return, fiscal discipline hasn't. The US national debt just crossed 38 trillion, adding $500 billion in a single month. Then we move into traditional finance, dipping into crypto. JP Morgan announcing plans to allow BTC and Ethereum as collateral in its institutional transactions. That's a big shift in tone from skepticism to adoption. Meanwhile, Sygnum Bank partnered with DBFi to launch Multisig, a Bitcoin bank lending platform for 2026. And Dubai's VARA gave Annii brands the green light to provide brokerage services, reinforcing Dubai as a Web3 powerhouse. SilverWolf called it clearly. Crypto is not just surviving, it's maturing. He also highlighted how DeFi perpetual volume broke records, over 1 trillion in October. Platforms like Hyperliquid, Lighter, and Asta led the way. Bloomberg even called Hyperliquid a superpower in crypto, showing how decentralized platforms are now rivaling centralized exchanges in both liquidity and innovation. Then he got into on-chain activity. Sui's TVL bounced back to 2 billion. Long-term BTC holders distributed around 28,000 BTC, but whales were accumulating elsewhere. Over 120,000 Link withdrawn from exchanges and 45,800 Ethereum added to wallets. So while older hands took profits, smart money kept positioning, a classic redistribution phase. He also covered some project shakeups. Ethereum Foundation moving 654 million worth of ETH, now shutting down entirely, and FetchIA's legal dispute heating up with Ocean Protocol. And finally, he touched on macro. Trump planning to meet Jinping just before the 100% China tariffs take effect. New Russia sanctions pushing oil prices higher, and gold seeing its largest single-day value loss since 2013. He then tied it all together with one line that really stood out. Crypto is maturing. Sometimes it's messy, but still unstoppable. Then we had Pedro's Monday upload, which complemented SilverWolf's blog perfectly. He reminded everyone that we're sitting right at resistance, and this is not the time to be complacent or afraid to take profits. He then talked through his BTC long position, explaining where he would be looking for his next re-entry heading into FOMC and earnings week. He reinforced that while he's still bullish overall, the key is to respect resistance and not force continuation trades when the market's showing exhaustion. He also broke down a few key altcoins, XRP, bullish sentiment tied to recent news updates, and CRV sitting right under a major trend line acting as resistance. Pedro described the current environment as a scalper's heaven, a market that's perfect for short-term precision trading, but dangerous for those holding without structure. So Monday gave us the full blend. Technical confirmation of the reversal signs NRJ highlighted, macro context from SilverWolf supporting potential risk on behavior, and Pedro's reinforcement of disciplined profit taking at resistance. Everything aligned with what we'd been expecting from that weekend trap. A pullback, structure forming, and a setup that now gives us room to watch for continuation or further drop levels as the week unfolds. Tuesday opened with a slow start. Asia consolidated and the UK session followed suit. Not much movement, mostly sideways price action. But as we rolled into the US session, things finally started to shift. We saw price begin to move to the upside, but at the same time, it invalidated the original 15-minute M formation, setting up what would become a 1-hour M formation. This is the kind of structure that catches traders off guard, because if we move this level, some traders may have been anticipating more upside because we have just had a fast move into resistance. However, as that move was happening, we can see that when price did come up, the traders in this candle who opened long positions, which is what we call trapped traders, remained trapped and then price quickly pulled away. So from there, price reversed sharply, keeping the trapped traders trapped. And if you missed getting an entry in here, you then got another chance to take a short entry from this lower high, the same area that previously prevented continuation. That rejection aligned perfectly with a move down towards the 15-minute 800 EMA, confirming that the momentum was flipping. By Wednesday, all we were waiting for was proof of the move or confirmation of the trend change we'd already seen here on the 1 hour time frame. Now it was all about confirming that with a lower high in anticipation of a drop level 2. That lower high could present itself as either a retest of the EMAs, the center peak of the M formation, a Fibonacci level, or an unrecovered vector candle. If you can find the area with the most confluence, that's your key signal. It's usually the first area where we start to see weakness form before continuation. So leaning into the 1 hour time frame a little bit more, if we draw a fib, you can see how the 38.2 lined up perfectly with the 50 EMA and the center peak of that 1 hour M formation. It would also be a full recovery of this red vector candle as well. That alignment gave us confirmation that this was the area to pay attention to. Cool. So where could we retrace to? I think drop level 1 for the 1 hour time frame is done, and I'll show you that once I drop down to the 15-minute. But whilst I'm here, I'm going to draw a fib and then I'm going to mark my areas out. So currently I can see we have held up at the 38.2. We might not go any higher than that. So if in the US session we get a lower high, it's essentially going to look like a 15-minute M underneath the 200 EMA on the 15-minute time frame. And if that happens, that's going to be bearish, right? Because we can't even make it above the 38.2, but it is currently confluent with the 50 EMA, which we already know. And price will break the 50 EMA, break the center peak, make a run to the 200, come back to retest the 50 EMA before continuation to the downside, right? So when we apply that to what we can see here, we are at the 50 EMA. It is confluent with the 38.2. It is also the center peak of the M formation. Like, what more confluence do you want? So we're here in the area now, but I don't think the entry is here until the start of the US session. So let's go to the 15-minute time frame and refine this. If US session gives you the entry criteria, which is a bearish candlestick pattern in this area, you want them to pull away fast, obviously. If they don't and they continue to hang around and chop, then something else is happening and we're not smart enough to know what it is. And because we're coming so close to the FOMC, which is in 6 hours, there's every possibility that they do a fast move up, take us out, and then they drop it. Once that retest came in, it was textbook perfection. The rejection confirmed drop level 2 for the 1 hour time frame, and from there price started making its way back through the CME gap we'd been eyeing since the weekend. Earlier that day, Cody hosted the UK live session. This is his chart update following that call. He was also looking for a retest lower high in anticipation of more downside as well. So the team were very much in alignment this week. He confirmed that his invalidation was if price broke and reclaimed the high of the week, which is this red line on his chart. For people who don't like to read, he writes a summary, and the summary is retest into the area of interest before a drop level 2. Thursday brought a bit more volatility, but overall structure stayed consistent within the model we've been following all week. We came into the day with that multi-session M formation already confirmed from Wednesday, and we were watching for drop level 2 to complete on the 15-minute time frame, with the potential for one more drop still to come. The bias was already bearish. The question was simply where to catch the next trade. During the UK session, we saw price come back up to repeat the initial high of the day before failing again. That retest and failure to break the initial high of the day produced a nice inverted hammer, which became one of the best opportunities to catch the short in anticipation of a drop level 3 the 15-minute time frame. Now, one important note for anyone still learning the system, you don't trade, drop or rise level 3 unless you've been studying this model consistently for at least 6 months. It's the most aggressive part of the pattern and requires full confidence in structure, timing, and confluence. Within the community, you'll always see a mix. Some traders may be long, and some traders will be in short positions. It all comes down to time frame alignment. If you're looking to scalp a drop level 3 on the 15-minute, that's fine, but remember, you're trading the tail end of the move. So this becomes your target for the scalp. Any lower than that is just cream on top. So by the start of the US session, the target had been met, profits secured, and this is when you would expect at least some sort of a retracement or sideways consolidation. So overall, Thursday was an excellent day as long as you were trading in line with the trend and the model, not against it. To wrap up the day, Annii posted a quick 10-minute update on YouTube. She reminded everyone that while she hasn't been as active on YouTube, the Discord community has been extremely engaged and focused on trading this volatility. Annii discussed BTC's price action in relation to FOMC, noting that she was open to a reversal off the battle zone she had previously marked out, but she wanted to see proof of reversal before entering any new long position. She also went into detail about how she's managing her grid bot setup, essentially hedging them to stay delta neutral, which was a smart move given the choppy conditions and ongoing drop levels. Her message was simple but powerful. Stay patient, stay structured, and let the market prove itself before acting. Friday followed that familiar end-of-week rhythm. Somewhere towards the end of the US session, we often see price spike one way before pulling back in the opposite direction as it transitions into Asia. This is the market maker taking profits before they hand off into the next session. As Asia opened, we saw a brief burst of volatility to the upside, but it quickly fizzled out. Price then drifted into slow consolidating UK and US session, typical of a Friday where volume dries up and traders start protecting their weekly gain. During the US session, volatility picked up briefly around the news event window. As we've seen many times before, when price consolidates too long, traders get impatient. Every fast green or red candle becomes a temptation to jump in, and that's exactly what the market makers exploit. We could see this clearly from the fast green candle because of the open interest. If you run your eye along the vertical line, these two green candles and this doji is where the open interest started to skyrocket. So as price was moving up, traders were opening positions. We're going to assume those are long positions. This is the high volume candle where buyers gave up and price pulled away. Price then quickly reversed, trapping traders who had opened long positions, and anyone on high leverage or with tight stop losses would have been taken out by this move here. A classic move before heading into the weekend trap consolidation. Later that evening, Annii went live on YouTube to break all of this down in real time. She began by mentioning that in December, the team will be taking a short break from social media and content creation. She then shifted into BTC analysis, explaining exactly what the Friday trap means and why it's such a key behavior to recognize. She warned traders to be cautious around those end-of-week bounces because that's where most retail traders get baited back into the wrong direction. Annii also discussed the macro context, reminding viewers to always stay aware of where we are on the larger scale, not just the intraday movement. To support her breakdown, she used Kayotaka, the tool that visualizes limit buy and sell orders. Her key takeaway was simple. If you understand how the Friday trap forms, you won't get caught in it. You'll be the one watching it play out. If you've been watching these wrap-ups and you're starting to see how consistent the system is week after week, this is your sign to come and learn it properly inside TTC. We trade this exact model live every week across the Asia, UK and US sessions, and we break down the same setups you see here in real time. You'll get access to our full course, live sessions with the cabin crew, the macro blogs from Jared and SilverWolf, and a private Discord filled with traders who are actually learning to think like market makers, not chase them. Whether you're brand new or refining your edge, TTC will help you build the structure, confidence, and discipline you've been missing. You can find all the details through the link in the description. So as we head into the weekend, everything resets. Liquidity's been cleared, fresh liquidity will be built, the market maker has already set the trap, and now the next major move is loading. The question is, are you going to be ready for it or reacting to it? If you actually want to stay ahead of these moves, not just hear about them after they happen, then you need to be in our Discord. Especially now heading into December. We'll be pulling back on YouTube for a bit. There might be the odd upload if something major happens, but inside TTC, it's business as usual. We'll be trading this price action live, session by session, exactly as it unfolds. So if you want to keep evolving with the market instead of falling behind it, you know where to find us.